Hello everyone, and welcome to this video where we will be discussing the basics of stocks. Whether you are an investor or just starting to explore the world of finance, this video will provide you with all the essential information you need to know about stocks. What are stocks? So, let's start with the basics. What exactly are stocks? Stocks, also known as shares or equity, are a type of security that represents ownership in a company. When you buy a stock, you are essentially buying a small piece of ownership in that company. This means that as a shareholder, you are entitled to a portion of the company's profits and have a say in how the company is run. Why invest in stocks? Now, why would someone want to invest in stocks? There are several reasons why investing in stocks can be a smart move. Firstly, stocks have the potential to provide higher returns than other types of investments like bonds or savings accounts. Additionally, stocks can act as a hedge against inflation, which is the rise in prices of goods and services over time. Furthermore, investing in stocks can help you build wealth over the long term, as stocks tend to perform better than other asset classes over extended periods. Types of stocks. Moving on, let's discuss the different types of stocks. There are two main types of stocks: common stocks and preferred stocks. Common stocks represent ownership in a company and give the shareholder voting rights in company decisions. On the other hand, preferred stocks do not give the shareholder voting rights but instead provide a fixed dividend payment. In the event of a company's bankruptcy, preferred shareholders are paid before common shareholders. How to buy stocks. Now that we've discussed the basics of stocks, let's talk about how to buy stocks. To purchase a stock, you need to open a brokerage account with a reputable broker. Brokers act as intermediaries between buyers and sellers of stocks and charge a fee for their services. Once you've opened a brokerage account, you can begin to research companies and buy stocks that you believe will perform well. Risks and rewards. It's important to note that investing in stocks does come with risks. Stocks can be volatile and can experience significant price swings in the short term. However, over the long term, stocks tend to provide higher returns than other asset classes. It's essential to have a well-diversified portfolio that includes a mix of stocks and other asset classes to mitigate risk. Types of stocks, common and preferred. Let's dive deeper into the two types of stocks, common and preferred. Common stocks are the most common type of stock and represent ownership in a company. When you buy common stock, you have voting rights in company decisions, such as electing board members and voting on major corporate actions like mergers or acquisitions. The value of common stock can fluctuate widely based on the company's performance and the broader market. On the other hand, preferred stocks are a type of stock that provides a fixed dividend payment to shareholders. These stocks typically do not have voting rights and are considered less risky than common stocks since they are paid out before common shareholders in the event of a company's bankruptcy. How to buy stocks, brokerage accounts and research. Now, let's talk more about how to buy stocks. The first step is to open a brokerage account with a reputable broker. There are many online brokers to choose from, and it's important to research and compare fees and services before choosing one. Once you've opened a brokerage account, you can begin to research companies and stocks you want to invest in. There are several ways to research stocks, including reading financial news and reports, analyzing financial statements, and examining a company's history and performance. It's also essential to understand the company's industry and competitors to assess its potential for growth. Risks and rewards, volatility and diversification. As we mentioned earlier, investing in stocks comes with risks. One of the most significant risks is volatility, which is the fluctuation of stock prices in the short term. This volatility can be influenced by a variety of factors, such as company performance, economic conditions, and geopolitical events. However, over the long term, stocks tend to provide higher returns than other asset classes, making them an important part of any investment portfolio. It's important to have a well-diversified portfolio that includes a mix of stocks and other asset classes like bonds and real estate. This diversification can help mitigate risk and protect your investments from market fluctuations. In summary, investing in stocks can be a smart financial move for those looking to build wealth over the long term. By owning a small piece of ownership in a company, investors can participate in the company's growth and success. Stocks have the potential to provide higher returns than other asset classes, making them an essential part of any investment portfolio. However, investing in stocks comes with risks, including volatility and the potential for loss of capital. It's essential to have a well-diversified portfolio that includes a mix of stocks and other asset classes to mitigate risk. Furthermore, investors should research companies and understand the industry and competition to assess a company's potential for growth. Opening a brokerage account with a reputable broker is the first step to buying stocks. With many online brokers available, it's essential to research and compare fees and services to choose the right one. Once an account is open, investors can begin to research companies and stocks they want to invest in. In conclusion, investing in stocks can be an excellent way to achieve your financial goals, but it's important to understand the risks and rewards. Remember to stay disciplined and stick to a well-thought-out investment plan, and seek advice from a financial professional if needed. With careful planning and research, investing in stocks can provide significant returns and help you achieve long-term financial success.